Thank you, Juan Carlos. Now, please help me to welcome Kyle Frank, Vice President, Exploration and Corporate Development of Troilus Gold Corp. Troilus is advancing one of the largest undeveloped gold-copper projects in Quebec, focused on responsible development and unlocking value in the past-producing Troilus mine.
All right, good morning, everyone. It's good to see some faces here early on the last day of the conference and after dark last night. So if you're new to Troilus, I'll start from the beginning, but if you're following the story over the past couple of years, there's a lot of updates to get through today. It's been a very exciting and busy year, so we'll work through that. There's a lot going on. So this is, for anyone who doesn't know, this is a past-producing open-pit gold, copper, silver project in the southern James Bay of Quebec. This operated for 14 years, produced 2 million ounces of gold and 70,000 tons of copper during the life of mine. Shut down in 2010, really due to a lack of drilling outside the known resources, so the resources were exhausted. The company at the time wasn't focused on this project. They were building other projects, namely Cobre Panama, globally. So lack of resources, shut the mine down, kind of a forgotten about asset. We acquired this in 2017, went public 2018, and got to work. Sorry, just one more thing. So since then, we've drilled over 300,000 meters, one of the largest drill programs in Eastern Canada, and we're one of the largest developing projects now in the country. So a bit about the timeline. I talked about the history. We've been working on permitting for the last couple of years. We're in the very final stages of that process, which I'll talk about more later in the presentation. We're working on basic engineering right now. Our feasibility has been out for about a year. And we're working on project financing to break ground in early 2027 in the best case scenario. This is a bit of a look at what we inherited compared to what we have now. So on the top, you can see this was really thought to be an underground resource, similar to Goldex, a nice ore body at depth below one of the old pits. And just due to putting the amount of meters that this project requires, built this out to what it is now, which is 13 million ounces, indicated and inferred equivalent ounces. So when I say equivalent, about 83% gold, 15% copper, and a couple of percent silver. So southern James Bay, Quebec, about 2 hours from the town of Chibougamau. Chibougamau is 8,000 people. Probably a lot of you are very familiar with Chibougamau. It's a mining camp. It's a logging community, very industry focused. So we're in the Frotette-Evans Greenstone Belt, just north of the Abitibi. And the Frotette, historically underexplored compared to the Abitibi, a lot less exposed outcrop, more till coverage, more boulder fields, generally more difficult to explore, which was left behind a bit of an opportunity. So a closer look at the property, 500 square kilometers in the belt. This is all prospective greenstone belt. We've spent the majority of our time and efforts on the mine site, but we do have numerous precious metals targets across the property, which we're actively exploring in the summer months. So we've just kicked off an summer exploration project as well. We've got teams in the field every day following up on some of these targets. So we still believe that there's a lot of opportunity for new discoveries in the belt, and we're always looking for a new, especially high-grade discovery that could help supplement the mine. You'll see there's two former producing pits, 87 and J. The new resources expand those pits out, and you'll see they're flooded right now. We are working on dewatering as well, which I'll discuss. So this is what was left behind by the past operation. A lot of inherited infrastructure. The mill was dismantled and sold, but basically everything else is in place. So 60 kilometers of power lines, 50 megawatt substation, connected to the grid, 40 kilometers of roads already in place, ready to go. And most importantly, on the bottom right corner is a fully permitted tailings facility, which is ready for operation and has capacity for about half the mine life. So we don't have to worry about civil works to build the tailings facility and build the dam. It's already there. It's ready for operation. So a bit of a summary of the feasibility study. Again, this came out about a year ago, just before this conference last year, actually. And so that outlined a 22-year mine life, averaging 300,000 ounces equivalent produced per year, peaking out year 6, 7 over 500,000 ounces equivalent. CapEx 1.1 billion. This is a 50,000 ton per day operation, so large scale, think Malartic, think Detour, with a low operating cost of under 1,200 an ounce all-in sustaining cost. So looking at our economic sensitivities, the base case was done at 1975 gold, about $4 copper. You can see the after-tax NPV is just under 900 million with an IRR of 14%. Fast forward to today's metal prices, obviously very different. At 3,300 gold, this is over $3 billion after-tax NPV and over 30% IRR. So very leveraged to the gold price, especially with our high production. Speaking of high production, this is a high cash flow operation as well. Once you get that CapEx paid back, this is a cash flow machine at over 150 million in free cash flow a year at the base case and over 300 million at the current metal prices. So looking at the production profile by metal, we'll produce in gold only 250,000 ounces a year, about 16 million pounds of copper, and 500,000 ounces of silver. So we'll produce gold in two ways. One is a gold doré bar, which is about 30% of the gold. The rest reports to a gold, copper, silver concentrate, and we'll produce about 75,000 metric tons of that a year. So in materials we actually produce, we're producing a copper concentrate. So we're very much a gold leveraged copper project, and the copper is really the key to how we're going to finance this project, which I'll talk about shortly. One other thing to note, I mentioned this early on, but we have kicked off basic engineering, so we're working with BBA, the Montreal team. So they're hard at work in the early stages. We started in February. They're completing trade-off studies, completing an extensive review of the feasibility study, and so with the plan to complete the basic engineering in the fall of this year. Again, this is just kind of project positioning on the all-in sustaining cost. I won't talk too much about this. This is the main takeaway here is we're a post-inflation, post-COVID feasibility study. These are more realistic and current numbers that we've used for our costs. So that's the main takeaway. So the financing. If you follow our news, you've probably seen a lot come out in the last 6 months about financing. So we started reaching out to export credit agencies, both in Europe and in Canada, about this time last year. So in fall of last year, we received 4 letters of intent from EDC, Euler Hermes in Germany, EKN in Sweden, and Finvera in Finland. In summary, the European ECAs are looking for offtake of our concentrate. This is a really nice, clean con, about 15% copper, high in gold, high in silver, very low in impurities. It's a very attractive con for the smelters. So we've taken those letters of intent, which were totaling up to 1.3 billion in senior secured debt, and have signed a formal mandate letter with 3 lead arrangers. That's EDC, the Canadian Export Development Bank, Société Générale, and KfW. So the lead arrangers put up the money, and the ECAs sit below them and guarantee the money up to 90%. So a great deal for everyone involved. And this is low cost senior secured debt. The mandate letters for up to 700 million. So we're actively, I guess just one more takeaway there, we're actively working on the due diligence on that process, and we hope to have financial completion by the end of this year. And that financial completion will be subject to permitting, but we hope to have the terms agreed to and the structure of the deal finished. Okay, so back to the mine site. I mentioned dewatering. The pits are full of water. We've been dewatering the J pit since August. We're down about 40 meters. You can see in this picture. This picture is about a month and a half ago or so. Still winter up there at that time. Down about 40 meters. This was completely flooded. It's looking like a pit again. The dewatering is going directly into the watershed. We don't have to treat the water. It's neutral pH. There's no suspended, heavy metals or anything like that. We do have a water treatment facility, but we're not using it currently. If we get lower in the pit and we have some suspended sediments or sand or silt, then we will start treating the water. So we expect to complete the dewatering of J pit by the end of this year. and then we'll switch to the 87 pit, which will take about 2 years. So we'll be well ahead of production on the dewatering front. So focused on the local communities in Quebec now. In the construction phase, this will bring 1,000 direct jobs to the north. And once in production, it will bring about 700 direct jobs to the company. So massive inflow of jobs to the north of Quebec, massive influence. And looking at tax dollars, obviously a lot of free cash flow. This is at current metal prices, this will provide over $4 billion in tax to the province of Quebec and just under $2 billion to Canada. So from an investment perspective, we're right in that sweet spot, engineering, permitting underway, all that boring stuff. If you look at the projects that are 2, 3, 4 years ahead of us, they have valuations that actually match their resource and match the type of work we're doing. So we're completely undervalued right now. Looking at Artemis, which has a very similar resource to us, they're a $4 billion company, or a $5 billion company now. We're about a $240 million company with lots of room for re-rates as we finish our permitting, finish our financing, and get closer to breaking ground. So just on the timeline, I didn't touch exactly on permitting, but it's well underway. We're planning to file our final environmental impact assessment this month, and then we hope to receive final permits by mid to late next year. That's been done in the province before, and we're confident in that timeline, especially with a brownfield site. All of our consultations and baseline work is done. So again, just to remind everyone, looking to break ground in a perfect world, early 2027. So we've put together a great team. We've made a lot of changes in the last 6 months or so. Mostly, I'll point out Chantal Lavoie. He's the new chairman of our board. He's a very experienced mine engineer, just retired as the COO of Iron Ore Company of Canada. So an amazing influence from our board of directors. We also brought in Andy Fortin, who is a metallurgist. He actually worked at Troilus for 10 years when this operated. He then went on to commission Meadowbank for Agnico, and then helped to commission Eleanor for Gold Corp. Very experienced operator. He's in the position of VP operations for Troilus now. We also have a project manager in Denny Rivard. He's built numerous multi-billion-dollar projects around the world, including aluminum plants in Quebec and in Africa. He worked on the REM project with the case in Montreal, if you're familiar with that. This is not a big project for him, so very happy to have Denny as well. So we built a team to actually take this into construction. Very quickly on capital structure, we're in a good cash position right now. We've got $20 million in our treasury as of our last financials, not including a $6 million investment that Van Eck did in January. On top of that, we just announced a 50 million Canadian debt facility with our financial advisor, Oramet. That's a 1-year term, kind of a bridge facility to get us through the next several months of all the things going on. So in a very good position financially, one of the best we've ever been. We're in a great position to tick all these boxes that I've just talked about and get us to where we need to be. So we're in a great jurisdiction, as we all know. We have the team to do it. This is a large-scale asset that will operate for over 20 years, likely much longer than that. And there's a lot of upcoming de-risking milestones that we're going to put out to the market in the coming months. So thank you all very much.